Titans, the breakout we saw for Bitcoin earlier this week ended up being a disappointing fake out. And adding to that, we are expecting the CPI inflation report for March today. So let's talk about all this and more. Kevart, hit that intro. Let's kick it off with an update for today's Consumer Price Index, or CPI inflation report for March 2024. As you can see in this table below, the market was expecting inflation to remain elevated with a consensus of 3.4%. But the actual value came in even higher at 3.5%, so we'll have to see how the market responds to this now. Usually news such as this isn't received well initially, of course, but it's often followed by a green day afterwards once the investors have had some time to sleep on it. Now let's take a look at the Crypto Fear and Greed Index. Just a quick note that although the name of this index would suggest that it's generally all crypto, the gauge primarily fluctuates based on the movement of Bitcoin. Today we are at 78, which represents extreme greed, which is slightly lower than where we were at yesterday, which was 80, which also represented extreme greed. So for now, we're still hovering on the lower end of the extreme greed range. Now let's move on to your daily reminder that the Bitcoin halving is in just 8 days. Also note that the halving date is now currently estimated to be April 19th, but again, it's a moving date based on whenever the 210,000 blocks have been added to the Bitcoin blockchain. And for those of you who are new to crypto, this event marks the time in which the Bitcoin reward for the miners will get cut in half from about 6 Bitcoins to about 3 Bitcoins every time a block is successfully added to the Bitcoin blockchain. Moving on to the Bitcoin liquidation heat map. Just a quick reminder that this map tracks the short and long position liquidity for Bitcoin in areas that are either light or dark yellow. The yellow areas will either be above or below the current price action, which are the short and long positions respectively. Looking at the 24-hour time frame, we're seeing most of the liquidity building up just below the 70K area. So there's a good chance that we could see a short squeeze pushing through that area soon, since Bitcoin tends to follow the liquidity. Now let's take a quick look at the Bitcoin ETF flow table. Just a quick reminder to anyone new to this table, we're tracking how much Bitcoin the institutions such as BlackRock, Fidelity, ARK Invest, etc. are buying to back their ETFs based on the millions of dollars they are spending per day against how much Bitcoin is being sold by Grayscale in millions of dollars as folks are switching out of Grayscale Bitcoin and into the ETFs. Yesterday, April 9th, we had our second consecutive day of negative total flows for the ETFs, which came in at negative $18.6 million. As usual, BlackRock led the way with purchasing $128.7 million worth of Bitcoin, but this was offset by the outflow of Bitcoin coming from Grayscale, which was at $154.9 million. Guys, this is your reminder that we are only 43 days away from a decision to be made by the SEC for the first Ethereum spot ETF by May 23rd. Don't sleep on Ethereum because you know what happened to Bitcoin leading up to the approval of the spot ETFs back in January. All right, now let's hit the charts. All right, looking at Bitcoin on the daily time frame, when we reviewed this chart yesterday, it appeared that we were possibly getting a healthy retest of the breakout from the top leg of the symmetrical triangle pattern. However, afterwards, the price broke down and the daily candle closed within the 68.6K to 69.4K support zone, leading to what's known as a fake out. At this time, we are currently falling below the support zone, likely because of the higher than expected CPI report we discussed earlier. If we continue falling from here, there's a possibility we can come down to retest the bottom leg of the symmetrical triangle and maybe even wick down briefly to the 64.5K to 65.5K support zone. Looking at the daily time frame again, we can see that the price for the current breakdown has retraced to the Fibonacci golden pocket. This was measured from the bottom wick of this local low candle to the top wick of this local high candle. So from here, a decision will have to be made for which direction we'll move towards next. And looking one last time at the daily time frame, one additional point I want to make here is that lately the volume has been trending downwards throughout the course of this symmetrical triangle pattern. As you can see here by this yellow arrow pointing to the volume which corresponds to the actual breakout candle above, the volume was fairly low compared to what we saw over here to the left at this other yellow arrow for the corresponding green candle above it. So it'll be important that we see the next breakout occur with high volume supporting it to ensure that we don't get another fake out. Titans, we are your one-stop source for guiding you through this Bitcoin bull run. Please join us as we continue to provide the latest market and technical analysis that are going to give you that edge.